Happy New Year from South Carolina. Well, we didn't get our Santa Claus rally in December, and we actually ended the year or ended the month down 2%. Some of this was due to just some weighing economic factors, but a lot of this was the fact that Jerome Powell seems to be reducing the amount of interest rate cuts going into 2025. We're now probably going from 3 to 2, and there's more talk about pausing rate cuts, and that hurts smaller mid-sized companies as they are more dependent on loans, whereas your large and your mega cap stocks um, are kind of be their own banks. So, huge note to look into 2025. There is some health that the market did take a bit of a breath, and we do see a bit of red. I know that's not fun to deal with when we look at our accounts, but from an economic and market standpoint, there's some healthiness to that. Um, the S&P 500, Dow Jones, Nasdaq, gold and silver, Bitcoin, all up last year. And again, as I mentioned many times throughout last year, a lot of things were going well. We actually had the best back-to-back year performance since about 98. Now, for those who were investing around 98, we got into 2000, and there was a dot-com bubble. I'm not calling anything, but we just want to be mindful of that going into 2025. Is if everything continues to roll up, if things get too frothy, we just want to have some caution. Now, I say that a bit tongue in cheek because we are long-term investors. So we're not investing for next year. We're not investing for the next 5 years. We're investing for the next 10, 20, 30, 40 years, even if we're retired. Going into 2025, here's the biggest thing. We want to take a look at our portfolio. We want to make sure that we rebalance. That way we can sell out of our stocks that have had nice run-ups, and we can buy into more of our stocks that maybe didn't see as good of a year last year, and just naturally sell high, buy low, right? If we have individual stock positions, we want to take a look at those, possibly trim some of the positions, because especially if we had like a NVIDIA or a Palantir, those stocks may far outweigh our original position in. So we want to take a look at that, and not saying getting out of those stocks completely, but if anything, take a 30-day wash and then reassess, possibly get back in, possibly go into something else. But we're looking at 2025 fairly cautious as far as what's going to happen. There's just some question marks around Trump's presidency and what he wants to do. Again, Jerome Powell, he paused some interest rates, and that has hurt some small to mid-sized companies. But we still believe that we'll see some gains in next year. And there are a couple notes that we want to make. One, it's probably a good year to make sure that we're dollar cost averaging in, meaning paycheck by paycheck, month by month, whatever it might be. We're just steadily going into next year, which will help reduce some of the volatility throughout this next year. We also want to just make a quick point of it might be a year, because it might be a little bit more muted, where active investments would be better than passive investments. Now, again, as a note, we are long-term investors, and long-term speaking, most active funds do not beat their benchmark, and therefore our positions will maintain, but we just want to put that note out there. Well, I thank you guys so much for watching this. We're really excited to look at 2025 from a firm standpoint. There might be some really fun additions and transitions, and we hope that they serve you guys as the client very well. I look forward to seeing you in 2025.